This year will soon be history, and that means it's time for resolutions and forecasts. VP Bank has also thought about the world in 2024, and that's what I want to talk about with Felix Brill, the Chief Investment Officer. Felix, the Investment Committee favors bonds over equities in 2024. Why is that?
Well, it has still to do with the current interest rate environment. If you look at the yield to maturity of a typical bond and compare that with the expected earning yield of a company on the stock market, then we see that they are at similar levels. So the return potential is similar. But now if we factor in another topic, namely the risk that a recession comes across next year, then actually bonds become more attractive. So if you not only focus on return, but also on take risk into account, they have clearly an advantage.
You have added high yield bonds. Why did you add those to the portfolio, even though they are riskier than corporate bonds?
They are indeed. They carry more risk, let's say, than a government bond. But at the moment, you get really well compensated for that risk you take. And especially, you get a lot of compensation if you look at the short duration bonds in the high yield sector, because overall the yield curve is inverted, so you get higher yields on a shorter duration than on a longer duration. But the risk in high yield for a shorter duration is lower. So you get more compensation at a lower risk compared to normal times, and therefore we think tactically it's interesting to add high yield with a short duration to the portfolio.
We rarely talk about alternative investments, but insurance-linked securities have done remarkably well this year. Which role does this asset class play in the portfolio?
Well, they add diversification, they make a portfolio more robust, and that has a lot to do with the fact that they move differently than other asset classes. So let's take, for instance, the case of Japan. So let's assume there's another earthquake. The probability of that earthquake has nothing to do with the valuation of the Japanese stock market. From a portfolio point of view, that is super. That is what you want to have in a portfolio. And if on top of that, also that asset class now adds significantly to the performance of the portfolio, then it's the best case, isn't it?
Thank you, Felix. And that concludes our view of the questions for 2023. I hope you'll join us again next year. Until then, goodbye.